So we're going to talk about the HUD 221D4 and when it's worth it, when it's not worth it, and the pros and cons of financing your construction projects specific to multifamily. So there's huge advantages to this loan. I mean, if you really hold long term, it's probably the best cost of capital out there for construction financing. So these are all kind of factors you got to play in. At the end of the day, though, if you're planning on holding long term and it's a sizable, property loan, oftentimes, more times than none, it's going to be a good fit for HUD, but we just got to make sure that the project itself kind of checks the boxes.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast. And I'm your host, Beau Eckstein. And today we're going to talk about HUD construction funding. So we're going to talk about the HUD 221D4 and when it's worth it, when it's not worth it, and the pros and cons of financing your construction projects specific to multifamily or potentially healthcare facilities. But we're going to speak to multifamily today. And so, this product is really good for a sponsorship team that's going to hold for the long term. If you're going to hold 5, 7, 8, 10 years plus, this is a good product. It's a 40-year amortization. And during construction, the amortization doesn't even start. It starts at certificate of occupancy. So it's really like a 42-year loan. You can go extremely high leverage and fixed interest rate for the full period. So there's huge advantages to this loan. I mean, if you really hold long term, it's probably the best cost of capital out there for construction financing. The reasons why you wouldn't want to use it is because it's going to take you, especially right now with the amount of volume that's coming into the HUD offices, it's probably going to take many, many months to get the funding package together. I mean, you can get green lighted pretty quickly. I think that process is 30 days out from the initial concept meeting. But as far as from start to finish, it's going to take you 9 to 12 months right now on any construction project. So what do a lot of developers do? They do bridge to HUD, right? They go bridge financing, bank, credit union, debt fund, and refinance with HUD. HUD used to have a 3-year rule from certificate of occupancy. That's now, as a little over a year ago, is gone. So there's no seasoning period. You can refinance right into HUD. And that's more of a streamlined process. That's a 35-year AM loan, but the rates are better than the construction loan, obviously, because there's less risk involved. And so that's a great product too. So you can go bridge to HUD, you can go HUD construction to start. Some of the reasons you may not want to use HUD is the timing. They're a little bit more stringent on their underwriting as far as the property management company. You have to have experience working with HUD. They may look at some different other characteristics a little bit harder. Like, for example, it may be easier to go to a bank because you're building townhomes as opposed to multifamily. Maybe it's a smaller project and there's more upfront costs with HUD, right? So there's all these things that go into it, but it's actually a pretty quick process to size up a deal. You can size up a deal from a construction budget and a pro forma. And then you can really kind of dive into the numbers based on HUD's underwriting with their vacancy factors, with their replacement reserves. You can get a good feel of what your sizing will look like. And from there, you can dive in deeper. So really, initially, we can get you a sizing in like 2 days, right? It's a pretty quick process. It's going to take just an hour or two to size it up a deal from a real rough standpoint. And then you can get a good feel if this makes sense Obviously, I fund all different all different sources, debt funds, banks, credit unions, different pieces of the capital stack. So I look at it from a holistic standpoint. Does it make sense here? Here's why or why it may not make sense. Does it make sense here? Here's why or why not it wouldn't make sense, right? And that's what I think you want, right? You want to be able to quickly dissect a deal and figure out what would be the best options, which way makes the most sense for this deal. And I think that's the competitive advantage, right? Like if you go to a direct HUD lender and all they do is HUD, they're going to just underwrite it for HUD. They might give you good feedback, but why not look at it from all the approaches? Does it make sense to go to a credit union? Because maybe you can do the super awesome construction to perm deal, or bank go construction to perm that you can get in without the red tapes. You can close in 45 or 60 days as opposed to 9 months. You might not get scrutinized, but those could be recourse deals versus the HUD being non-recourse. So these are all kind of factors you got to play in. At the end of the day, though, if you're planning on holding long-term and it's a sizable, property loan, oftentimes, more times than none, it's going to be a good fit for HUD, but we just got to make sure that the project itself kind of checks the boxes. But where else can you get 40-year fixed? There's no adjustments. It's a 40-year fixed term on the construction project, 35 on the acquisition and refinance. So phenomenal programs. I would say comparatively, if you want high leverage, you're looking at bank with C-PACE financing if you're in a state where it's enabled, because we can achieve 85% total leverage with the C-PACE piece. So there's lots of ways of funding these deals. It's just really having a call, having a conversation. Anyways, I'm going to stop rambling on, but please like this. If you're watching on YouTube, please share. I'm trying to get more views, get my content out there, get YouTube to like me a little bit more. Anyways, post in the comments if you want to hear on any specific topics. Thank you for watching as always, and I'll talk to you soon. Thank you.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.